We're turning gears to technology here on Wall Street Confidential. Why not? I mean, everyone's talking about banks. We want to talk about technology, and Jim Cramer has a take on this.
Well, I mean, last night, before Bank of America came in, and even after Bank of America came in, the NASDAQ futures were the most heavily being hit. And I just marvel because, sometimes what you have to do is you have to look at what the makeup of an index is because these are all wildly emotional indices. I mean, Intel, I don't think they're having that bad a quarter. Microsoft, not that bad a quarter. Oracle reports this week. I don't think it's going to be that bad. Now, there is some financial exposure. I mean, Lehman was a big buyer of tech, obviously. AIG is a big buyer of tech, and that's always hurt EMC. So you can sell EMC if you want. But Hewlett-Packard analyst meeting, I think Hewlett-Packard, I'm anxious to buy some anytime it goes below 45. IBM, I think they already told you things are going really well. I think Cisco's having a great quarter, and the stock's right where it was when it reported the good quarter. I don't know about RIM and Apple, only because they become highly emotional stocks. So I'd like to tell you to just buy them, but you have to buy them. I mean, Apple, I'm still waiting for it to break 150 to be able to start buying back the next part of what I said sell between 170 and 185. And and RIM is just, I'm a long-term buyer of that. Amazon seems very, very interesting to me. Google was until the Justice Department got involved. I always fear the Justice Department. Microsoft is okay, but it's the reaction to the NAS and to tech that is always mystifying to me because those are the companies they're worldwide growth companies. And if worldwide recession occurs, they obviously aren't worth as much. But they're not uniquely tied in to Lehman Brothers, and yet the market acts as if they do. And in the NASDAQ in particular, you got this great opportunity to buy Gilead when it was down. I mean, some of these stocks have nothing to do with this crisis, but they go down. But again, I always urge people, we have gotten way too, even at Real Money, I feel, and at Street.com, way too interested in what the market does, which then made it so you couldn't buy Qualcomm when it was before it started rallying. I mean, you got to just say, you got to write the ledger, get a yellow pad at it and say, okay, which stocks are affected by Lehman and which aren't? And the tech stocks are much more on the are not side of the ledger.
All right, you said Amazon. I want to ask you
man, I really
about
like
that.
Amazon here.
Even as we approach an environment where people are losing their jobs, consumer spending.
Amazon's perceived as being a bargain.
Okay.
And both sales tax wise and how it gets there. And there's no denying that it is. And Amazon's come down, and I think it's going to be an Amazon Christmas.
Could it be a horseman?
No, you can't buy, because remember those stocks, I'll tell you what's happened. It's really, and I remember this from my hedge fund days, stocks that are over $100 trade wildly emotionally here. And so you almost have to be very careful with them because their businesses may be good, but because the stocks are so easily pushed down, you end up owning a stock of a company that the company's doing good and the stock's doing badly. And that's what I guard against.
All right. That's for our tech take on this day where banks are dominating headlines, but we still got some trades for you. Thanks so much, Jim.
Thank you.
This is Wall Street Confidential. Stay tuned.